Hello. I guess that some of you already in, and yeah, welcome to the Zoom meeting. So we're going to start very soon. So we are going to go through, as usual, the broad market STI. Then we talk about individual stocks that has the potential to move. Of course, some review. Like if you remember 2 weeks ago, I mentioned about this counter high P. So for those who have actually gotten high P, congratulations. Roger, can you hear me? Okay, we shall start the session. So as usual, the sessions will be recorded. So just in case if you need to review, then you can ask for the you can ask for the video. Then we will I mean I will send you the link. Okay, so we will start with the STI, and if you have questions, you can send through the chat and to everyone, so everyone can see your question. Then we try to answer it as detailed as possible, because we have limited time. Zoom only limits me to 30 to 40 minutes. Okay. So I have a question here. I think everyone can see what is the situation on Glove shares. And okay, so before that, we'll let us look at STI. So ever since our meeting 2 weeks ago, I believe STI was somewhere around here, I think here. So it is actually quite a magical month for the index, because it has been quite a while we see STI run like this, right? I'm talking about the so-called pandemic situations where everything still doesn't look very so-called bullish, and our STI can run like that. You know, if you look at the pre-pandemic, we really don't have that run like this month. If I were to measure this upward run, is only 8.9%. Okay, even this straight line upward run is only 8.2%. So it's really quite unbelievable that we have actually recorded 20% in a month. Okay, this is quite a feat. Our STI is actually outperforming the rest of the world. You look at this Hang Seng, and if you look at US Dow and S&P, they went up and down, but we have no down at all. We just simply charge all the way up to the resistance level. So the resistance level that STI has conquered, right, has in fact broke out from this 28,038 level, which I have very much mentioned in my email. Then we see that STI actually is going to the gap, this what we call the runaway gap, because after this gap, STI actually had a big crash all the way down. So we had a runaway gap to be filled. So once we exhausted this gap, well, STI is ready to go into a new trend. So the question here is, how long can it last? Now, a lot of questions coming, right, for my clients, that when should I sell the bank? Remember last time I mentioned that if I sell the bank, the bank can even still continue to go up by another 4 to 5%, right? So later we'll be looking at the banks. Okay, so how far can STI go? Why I talk about the banks, because the banks is leading STI up. Just in case if you follow the market, you didn't follow the market, right? In fact, STI led by the banks. So when should we take profit? I think in this kind of market situation, since SDI has already demonstrated its strength, so now we shall wait for weakness. Rather than sell in anticipation, we sell in terms of the action from the market. Okay, so we wait for the seller to really comes in, then we sell. So for example, if you out of the blue, if you see Dow is green, Hang Seng is green, but SDI actually traded lower, negative, then this might be the sign to tell us that maybe the institution, they are exiting. So this could be the sign that you may want to slash half of your position if you have a so-called decent size. If you have only a very small position, let's say you have 300-400 shares in DBS, well, you can wait for a little bit longer, maybe the next following day confirmation, then you sell. So like for example, okay, just a quick example. So you saw there is a weakness here, black candle open higher but close lower. So you have a sizable position, say you have 5,000 share in DBS. Then what you do, you can clear 2,000 or 2,500 share, leave the 2,500 share for confirmation. Now the next day open lower, right, and then traded lower. This is where you can start to clear off your balance 2,500 share. Now by doing so, probably you are already reaching the high level with SDI already. So sacrificing a little bit of profit doesn't hurt. Why? Because this method actually have helped you. So let's take a look at DBS. For example, my point, using myself as example. So I sold DBS at this point, right? And DBS after from where I sold has actually went up by another 5%. As I mentioned before, after I sell it, it can still go up by 5%, 4 to 5%. And indeed, DBS actually went up by that. So, so if, let's say, for example, if I were to sacrifice a little bit of profit, right, I can actually see myself make another 5.6%. Now, if to put it to context, if I were to put it to context, I would say that, so here, this is a black candle, isn't it? So you wait for the next day black candle to close below here to clear out everything. Okay, so this is going to be your so-called level of taking profit. Now, at this black candle, probably you sell most of it. So all in all, you are sacrificing 2.6% versus a potential upside of 5%. So this is the explanation or examples that can help you to visualize why do you want to do that. So let's say, for example, if you see SDI, this Dow, my apology, DBS went up by 5.6%. You follow the same method. You wait for black candle to come in and then sell somewhere 2% lower. So you are still risking 2%, but you are giving yourself potential chance to see 5%, 6%, 7%. So this is one of the way that you can use to ride this current bullish run. So for the time being, enjoy the ride, and let's see how the SDI would react going forward, or rather the banks will react going forward. I keep saying SDI. Why? Because when I look at SDI, it's always the banks. You look at how OCBC runs. Okay, so taking OCBC example, you see this black candle, you take half of your profit, you still have right, the balance to run up to give you another 3.6%. As it continue to go higher, you stand to make more, right, if you were to take half of your profit. Right, UOB. Well, UOB, I can say that it's the best performing bank so far, right? You look at how it goes up, it is unbelievable, really unbelievable. So it has gone pretty much 24% from its bottom, and And again, right, I think now because of the market showing that STI is so strong, so might as well just try to ride out and see where STI can hit to. So risking 2% or 3%, right, of your profit to see that whether STI can give you another maybe 3-4%, 5%, right? If STI continue goes higher, right? But to be frank, right, I see a chart that moves like this usually gives me some reality check where, you know, upward, right, with a higher high, higher low would actually gives you more strength. But every day up and gap up some more, does that means that weakness is going to come? History tells us that, you know, there are always strong selling right after that. Like I mentioned 2 weeks ago, my stand is still the same, but now the market doesn't want to sell, so we don't sell. So we wait for the seller to come in, then we sell. Okay, so for the time being, I don't even want to check resistance level because resistance keep breaking. So this is a sign. These are the signs of a bull run. So we just let the bull runs its course until, like I repeat, this is, I think this is the 4th time. Just wait for the seller to come in, then we sell. Okay. Another example of the seller. Now, when you look at this kind of candle, what does it tell you? Ooh, wow, quite bad. I probably take half, 1/3, or 1/4. Any part of a profit you can take, right? Just take the rest here. Well, oh, after you take profit, it may rebound. Yeah, you rebound, but you never know. Sometimes you may be caught like this. So, like once you take your profit, never mind, just wait patiently for your next opportunity to get into this counter. This run is very good example to tell you that, what kind of counters are that you should actually, you know, buy when it actually come crashing down. Okay, it's no brainer. You know, no brainer. I mentioned 2 weeks ago. You know, our banks are the best banks in the world. You know, when they come crashing down, wow, these are the time for you to keep averaging down until you have a very low average. Keep buying, because the first time when you buy, it may continue to go down. Keep buying until, you know, you exhausted everything, and then wait for it to recover. And in the meanwhile, while you're waiting, enjoy the dividend. The good thing is they also pay very good dividend. Okay, so just continue to, you know, ride the trend. Now, some sector has gone very strongly, right? Like the transport sectors, Comfort Delgro. I mentioned, in fact, I was anticipating this kind of rally very long already, until my turtleneck already become giraffe. But this run really amazed me. It's going so unbelievable high. If you were to zoom out the chart, you look at, wow, this is a double bottom breakout. Wow, it's a huge double bottom, and it's a breakout there. So yeah, same, using the same method, just wait for seller to come in. While waiting for the seller to come in, ride the trend. Now, for if you have the question that, when should I enter? Then this will be the next thing really. Once seller come in, we see how the stocks decline, right? If the decline is you know, with decreasing volume and the decline is getting smaller and smaller, then this is where we are going to find opportunity into this counter. It's very subjective to tell you when should you enter. So we wait for the chart to show us the sign before we enter. Sets, fantastic breakout. In fact, if you dare to trade on breakout, right, today, I actually missed this. I missed this chart totally because I was waiting for more selling. Then once a breakout like this happened, wow, this is where I can chase. But you know, this stock seems to be impatient because of the vaccine news again. So you can see, in fact, overall, it was a flag breakout because this volume is actually quite low. And where it's going to hit to? Sets unbelievable. If I were to do a projection, conservative projection, maybe we can see 4.93, but that is a projection. But if you are looking at resistance, is 4.6. But again, like I say, resistance keep breaking, right? Keep breaking up. So what do? We ignore resistance. We wait for seller to come in. Then we take our profit. Okay, this strategy was applied with one of my client. He's inside here. Not convenient to say who is it. He's on set. So we were discussing in the morning. We had a morning talk, 10 minutes talk very quickly. Then we mentioned, hey, how should we go? So I say, okay, for sets, I don't think we should sell all. We sell half of it at 417. Let the remaining half. So I set a trailing stop. I say if no bleach $4, we no sell. So this is the trailing stop. So if it doesn't go below $4, we just keep it. So so what happened is after we sold at 417, sets came down yesterday, surprisingly due to the cancellation of the bubble, and then well, almost hit the 4. I was monitoring. I was like, oh, sets is only $4. Right? If it's $4, then yeah, sell. But today, actually, nothing need to be done. Actually, don't even need to look at the counter. Just see how it ends at the end of the day, and then just continue to hold. So this is a real-time example or live example as well. So SIA, those who receiving my email every day, I actually plotted the pennant formation. In fact, SIA becomes a flag formation. Breakout today, hit my break entry point 412, and today just rocket up all the way. Look at the volume, fantastic. Again, no selling volume, no sell set trailing stop. So we shall continue to see where it's going to hit to. Right. Right. The sectors that I want to go through, which has the next potential that you may want to take on, is the tech sectors. If you look at Franken, right, it is this is a the rectangle formation. It actually break out of this rectangle formation. Look at the volume is very high, right? And if the follow through buying happens, we may see Franken go back to 125. Okay, if there's no follow through buying, doesn't matter, it's fine. Just let it pull back with light volume. This will give you the chance to enter into this counter. Okay, same for UMS, right? You attempt to break out today. Look at the pattern is all the same, rectangle pattern, attempt to break out. If it can't break out, pull back, hold firmly at 1.01. This is where, you know, I mean, I will include in my email again. All right, if I were to remind you on Hy-P, remember last time I mentioned, the last meeting I mentioned about Hy-P. See, Hy-P has a first pullback. You know, if it sell down with light volume again, you know, this is going to my to be in my email, and this is going to be a trading opportunity. So indeed, it happened. I put it in my email, and this is what happened after that. Okay, so we are going to look for opportunity like this. Of course, it's not a sure win because I can't 100% predict whether there is going to be follow through buying, right? Because the technical chart is just playing 70% of it. 30% is still depending on the market. So if the market suddenly change its direction, change its wind, no follow through buying, then we got to hold as long as we can, and then wait for the real buying comes in. Okay, so having said that, holding means if it's still above the stop loss, the chart still looks nice, then we continue to hold. Right, so Hy-P has already gone up way high, but UMS, Franken, and Valuetronic hasn't. All of them is still within or just above its rectangle, and Valuetronic is a slow animal compared to the rest, but look at this, it has just managed to inch up. In fact, it's just at the resistance, and what we will be looking at is here above the 605. Once it breaks out above 605, volume shot up or shoot up tremendously, surge up, then we can aim for 6.5 or higher, maybe about 6.85 if Valuetronics can keep up its momentum. AEM disappointing, but showing signs of recovery, right? I would want to use the weekly chart in this case because I don't see a clear daily chart. I don't see a clear formation or anything. So I want to use weekly chart to help me. I want to see AEM goes above the weekly chart, above 363, then we can see more recovery. So you can see AEM actually has the so-called worst chart out of all the tech sectors, but it is the leader. So I couldn't understand why the chart is like that. A lot of people keep telling me that, hey, there are announcements that their directors are selling, this caused the price to be depressed, etc., etc. But if you were to look at the chart now, there are some form of recovery, some potential chance for it to reverse up, especially today it closed at a decent level. So next we need it to be above, like I say, 363, and then we can see 375, etc. Okay, so the indicators are actually pointing up, so we have a good chance to see AEM recovering. Right, so with this, the tech sectors, right, it's actually very promising. Looking at the chart itself, seems to be breaking up. So tomorrow we can start to monitor a bit, see whether is there going to have any follow through buying. Next, we are going to look at the back a little bit on the transport sectors. This is related to the transport sector, VCOM or Vicom. Okay. You see, this is a strong rally and this is a long flagpole. You see the pullback over here. Look at the volume declining, and this is a flag pennant formation. Next, we are looking for a breakout. So if the breakout happened, I think phase 3 is opening, right? And our country is going to phase 3. And the routes are going to have more and more cars. So this could be the anticipation that VCOM is going to have more business, maybe, right? And having said that, if we can break up 2.24, volume surge beyond 0.3 million, this is a lightly traded counter, unfortunately. But it's a good fundamental counter dealing with all the car inspection. It may really go back to where it was, or 2.42, 2.43. Okay, we should keep a lookout on this. Okay, so now we are going to look at the glove sector. So what happened to the gloves? The gloves, many has many way of saying. So one says that the gloves are still in hot demand despite vaccine. There's a strong shortage of gloves. Okay, but then the other camp was thinking that once vaccine comes in, everybody get the immunization, then the gloves will slowly die down. So this actually gives a very mixed view on the gloves. So let's take a look at the chart. So if you look at the chart itself, if you if you want to see top gloves technically, right, sustain at the high or maintain its strength, the least thing is it cannot break below $2, because if it breaks below $2, right, this is a bearish formation, a topish formation, but not entirely. I must say this, not entirely true until you see a strong breakdown. Okay, it's not entirely true, because I've seen Wilmar. Give you an example of Wilmar. I actually posted this in my email, right? Wilmar doesn't actually fulfill. You see, it breaks down, it rebounded. Okay, now so if you look at this top gloves, normally if it continue to come down, touch this level, touch this $2 level, and then break below, if it rebound, then this is your chance for you to actually, if there's a chance for you to short lah. But I don't think top gloves is shortable in layman time. Okay, but the whole chart looks toppish. So this is not a good sign. Let's look at UG Healthcare. Then we make a conclusion on what we think about the healthcare, the medical gloves. Similar, okay, similar, and but UG Healthcare cannot, in fact, cannot break below 625. Then we have Riverstone. Riverstone similar, but already breakdown compared to Top Gloves, already below the breakdown point. You see the in fact, UG is also below the breakdown point. You look at this point, which is 142. Riverstone has actually gone below it, so it's struggling to go beyond above 142. And if you struggle to continue to do so, rather you continue to struggle rather, and breaks down again, then we may see more downward movement. Okay, so let me just pull the chart side by side. So you can see Top Gloves over here, rather UG, sorry, UG. You see that you know, they are actually very similar. One, you know, behind is Top Gloves and this is UG. So my point of view is you if you want to trade this gloves company, don't aim for high. Maybe swing rebound, yes. Anticipate that you make 5% or 3-4% is fine. But if you expect last time like 100%, 200%, I think it can be challenging given the market situation now. Even if you really had that high hope, I would say that you should not have huge exposure on this, because it's really hard to say, because look at the whole situation here. Many countries has third wave, fourth wave of COVID. Okay, but this has not helped the medical gloves, right? So in fact, on the contrary, they start to position in those counter that was beaten down, so that once this third, fourth wave or fifth wave clear up, then we can start to see all these SIA return to profitability, ComfortDelGro return to profitability, etc., etc. So you can see the market has already changed their view accordingly. So what we should do is also to make sure that we are not heavily exposed to those that the marketing is going to be, or at least we think that there is still chance on that we don't this gloves we don't have heavy exposure on it, right? This is what my view is. So looking at the chart formation, it is also quite scary in a sense. Yeah, so in a sense that it may continue to go down lower. So my recommendation is not, again, not to have heavy exposure, maybe 1,000 share, 2,000 share, just to try to see whether is there any swing up. Yeah, that's all. Okay. So with the gloves, I mean with the gloves counters, I hope that you have a clear view of this, and then try to reposition yourself, not to get too heavy exposure on them. I used to have all the gloves counter, almost all, sorry. I have Riverstone, MedTech, I have Top Gloves. And then when the first vaccine came out, when Pfizer announced a 95% or rather 90% vaccine success rate, over here you see the gap down pump. Then this is where I quickly cut off my position, and then I clear out all my gloves counter and then stay away from it. Right? Why? Because even the earnings are strong. The earnings are strong. It is actually subjective that whether they can continue this strong earnings, because they are probably seeing that the demand may slowly go downward. Okay, although there's still so-called shortage, but will the demand, this so-called shortage, still need the demand to keep up in order to create that shortage. So if this demand doesn't keep up, the shortage will just go away. Okay, now my meeting will end very soon, so I'll just talk until he cuts me off, and then we will end the session. So I have these sessions recorded, so just in case if you need to review this video, you can just ask the link from me, just send me a WhatsApp. Okay, the next thing that I would like to go through, right, since there's no question, so I will just continue to look at any counters that it may interest you. Yes, this one very important, I forgot. Keppel Corp, Sembcorp Marine. Right, there are talks that they are going to have merger. In fact, I read one news article saying that Keppel Corp actually has created a new position for the merger and acquisition to take place. So you can see Sembcorp Marine rally up strongly for the past 2 days, 15%, another 20%, and you look at Keppel Corp, right? If you follow my email closely, my short post didn't come through, then it reversed up, break out some more, and then my target was 522. So it exceeded the target, actually start to kiss the 200-day MA, which is a key measuring point where whether Keppel Corp can actually change its trend. But again, if you look at such a very strong movement like the rest of the blue chips, right? I think this resistance are least of a concern. Now the next concern is when the main concern is when the sellers are coming in, because they can just break the resistance. The seller seems like they are not coming in at all for the time being. So if Keppel Corp and Sembcorp Marine really were to merge, there might be some hype, and then Keppel Corp may be pushed towards the next level, maybe above to 580 or even above $6. So the oil and gas is actually in play today, also partly due to US, because they're saying that the Biden is going to appoint Yellen. I think most of you should have already read the news. And then this actually triggered the oil and gas sectors in US to boom. I don't know whether Yellen equals to oil or not, but it's kind of a surprise to me. But nevertheless, when the market is bullish and you're holding it, why not just enjoy the profit? Okay, so for the time being, I would want to focus on tomorrow. I'm going to focus on the tech sector first because their chart looks more promising. Other than that, all the rest of the chart is just how far it can go. If there's no seller, just nothing to do. Why? Because I couldn't be chasing all the way up at the high. Because if I were to chase, I could be the could be the one that is buying at the highest point. So so for the time being, I'm just sitting with the cash, waiting for the banks to come down so that I can actually load some banks, and then maybe I would also look at Vicom. So this flat patterns looks nice. Take some small risks and then trade. And then last but not least, yeah, I remember this counter, Yangzijiang, right? This counter is the daily chart doesn't really look fantastic, but I see some promising action on the weekly chart. Why? Because you look at weekly chart, it looks more calm. The consolidation happening here and like a rectangle. And today it actually try to cross above the 20-week and the 50-week MA. Is at that point. So if tomorrow close at 9.6, close up 9.6, so it's above that 20-week MA. So it has a chance to continue go higher to probably 104 or even 107. So we can see Costco, Costco shipping or Costco Corp. Right, we can see how Costco runs. So this Chinese related counter, yes, you may see some follow-up action from Yangzijiang. And SunPower, for those who follow my email closely, SunPower, my pattern breakout, I also mentioned 2 weeks ago, my pattern breakout has been always there. You always break out, and then once it form pattern and then go higher. ST Engineering, very strong. There's nothing to worry about. Adeline, there's nothing to worry about. ST Engineering is very strong. There's no reason to sell. Just continue to hold it until seller comes in. Hopefully I have another chance to buy ST Engineering. After I took profit, again, it actually went up higher and higher. But I mean, I chose to take profit. But then the thing is, congrats to the rest that has ST Engineering, which is a very fine and very good one. The good news about ST Engineering is they have racked up a lot of contract. I think it's more than 1.5 billion. So that's why they are quite strong. Okay. So yeah, thanks for your questions. Thanks for attending. Right. Before they cut me out, luckily I have finished what I want to cover. Okay. So if you like to see the videos, this recording, right, just feel free to WhatsApp me. But any questions, you can separately WhatsApp me. Then we can have a quick discussion through WhatsApp or through the phone. Okay. So I'll see you 2 weeks later. Okay. So thank you for attending. Good night and take care. Stay safe. Yeah. Bye-bye.
Bye.
SIA Engineering. Then come in. Yeah. Also very strong. I have SIA Engineering, but my price is yeah, not there yet because I hold for long term. Okay. So it's still strong. Hopefully it can reach 2.21 or beyond. Okay. So with this, yes. Goodbye. Okay. Thank you. Thank you for attending. Bye.